Netflix, the stock of the town. Not that there are some amazing series have been launched, but because a stock plummeted last week because of the loss of a certain percentage of their subscriber base and their revenue miss. But that was the news, and how and why there was overreaction. We want to cover that and what we can learn from this particular saga, especially in the time of this. You have to make sure that stock market is all about learning and improving every day. And I want to cover this specific thing because Netflix is just one example where you can see the stock crashed, but there are many such examples I can cite. It's all about how you prepare yourself for these, and when what is the right time to exit also is very important. It's not only about investing. So in this video, I want to cover specifically very 3 points. Okay, and those 3 points are why I never invested in Netflix, which I want to cover that, and second being, and I'll give you some pointers what is the reason for it, and also just to give you crux of it. And second being, if you were the investor, how would you have avoided this, and what the journey should be from. And we can look at it from hindsight, but I'm sure as an investor you want to know what I would have done it differently, and you also can benefit out of that. Again, I've given a disclaimer at the start of it. Please do consider that seriously. And whatever I'm giving you advice is, or whatever I'm sharing as a knowledge, is not to be treated as an advice. Please consult your financial advisor or take your own decision based on your own judgment. And the last point I want to give you, what aspect of it, and that is what, if you want to learn from this, I want to give you a template which I would have acted on, exactly what I would have done to exit early and not face through that whole saga of getting a crash of 30-35%. It's not that I have not gone through it. I've also gone through it, and I've had my learnings, and I want to share that through this video as an example. But there are some other examples I can share with you, which will also along the way, so that you can see that happening in other stocks as well, and exactly the same templates can be implemented. And there's a surprise element at the end of this video, and I'll keep that in. If you stay till the end of this video, not only you will learn, and as a thank you gesture, I want to give you a surprise gift as well. So let's get started. So my name is Shivendra Bhatia. If you're new to my channel, I'm a founder of Peaceful Weekend Investing Hub. My main mission and purpose is only to help busy professionals like you to share my knowledge so you can invest in stock market like a pro. And I strongly believe the retail investors have an edge based on my experience in working with so many fund managers and also being an ex Nasdaq employee. And I have seen it firsthand that retail investor has an edge, and it's all about focus and it's all about discipline. So let's go with that. Invest with a plan, not with a feeling. Let's go with next step. So this is one of the chat from my Telegram group, and one of my student mentioned to me that, hey, there's a crash, and generally because I'm not an investor, so obviously I would try and avoid that, but I would have come to know over the weekend. But then I hope to take once the storm settles. And this was his opinion based on one of the big investor has invested. So then I wrote back to him saying that I don't think so it has a big economic moat, and I will tell you why. And there are so many OTT platforms in the competition. It all depends on the content now, and we can see ourselves alone in Australia, India. Eventually they're all going to be bundled as part of the internet. So my view is still the same, no matter what. Sorry, no matter what the case will be, you have to select your choices. Otherwise, there's you're not jumping in based just because there's a popular choice, right? So you have to make a decision which stocks you can invest, because that's the beauty of stock market. You have, it's a basically supermarket of companies, and there's sales going on every time, but you have to choose your bets which you think you can build that into, based on your intuition and conviction, that you can hold for long. And that's the crux of the Peaceful Weekend Investing. Now, Just before we go, I if you want to be part of my Telegram channel, it's a completely free Telegram channel. You can search for Peaceful Weekend Investing VIP members, or you can click on the link which is there. And I keep sharing regularly sbhatia.co/telegram, and you can join the channel and be part of it. In Telegram, it's completely privacy is there. The numbers are not shared, so that's why I've chosen Telegram, and it's much easier to share quicker as I'm been going rather than making this video, because I have to set my time, record it, and upload it. So it takes time. If you want to be part of it and keep learning, join in here. We are doing some great stuff together. Thank you. So let's move on there. So before that, I want to just delete this. So one quote: challenge is not to pick the best investment. The challenge to pick the right investment. Right, that is the most important thing. It is. You can have, we all know Nike is the best, McDonald's, all this Netflix, all these are popular choices. But there should be a right time to invest in all these companies if you have a conviction. So that's a very important. It's not about picking the best investment; it's about picking the right investment at the right time and right price. Okay, obviously you can't time that specifically, but it's also important that you have a margin of safety so that you can avoid such big losses if you invest when you're hearing it with the popular choices, and it's all over in the media and everybody's talking about it. So it's important to, I wanted to start with this quote so that we get the context here. Now, I did some analysis here, and I looked at it, what exactly was going on. As you can see here, if you see, this is a low, and this is a kind of a weekly chart of Netflix, and this is the story which was there from October. And October, you can see there was almost 112 weeks, and there was 177% gain. Okay, and then the entire gain was wiped off in 23 weeks. Okay, and that's the thing. If you were the investor and if you don't know when to exit, obviously nobody knows the top and nobody knows the bottom, but you need to have some method in place to exit that and not be greedy. They say that there's a saying which is, and again, really coming to an implementation, as I told you in this channel, is that I always want to have an implementable knowledge, not the theoretical knowledge. When we say that, it is about, be fearful when everybody is greedy and be greedy when everybody is fearful, right? So that is that if you look at it here, everybody was enjoying the party, but hey, there is a time when party gets over and you need to exit. Also, you have to find the exit gate. And always keep saying, it's about like being in a nightclub and you're partying hard, and but you know that that party will come to an end. But before the end, there'll be a gush of people going out of the door, and obviously the lights will be on, and you know who's dancing. I don't want to say anything in this time specifically, but what point I want to say is that you want to make sure that you exit at the right time and maybe before that. Okay, and so it's just a synonym to that. And obviously, there was a clear euphoria was building up, and there was a time where you need to know the news comes always later, and the stock already crashed before that, right? News has come this week or last week, but you see, hey, the stock was already plummeting before that. Why? Somebody knew something, and that is the aspect of it. When people are exiting, you need to know why they're exiting, and you need to be party to that. And that's where the smart investors knew something about it, and they left, right? So that's one. And then comes in this. I'm sure you would have seen the cycle of market emotion, and this particular chart is purely fitting here as example. Is that you, if somebody is holding the stock, they would be thrilled with the joy, and especially when they were seeing their money was almost 177%, and that's the status one will be. But when it crashed, you don't accept that, saying that, hey, this will come back, it's Netflix, amazing company, it can't crash and it can come back, and then anxiety is there, denial is there, and then suddenly when you start seeing these big candles, there's a fear. But you're saying, hey, I was having 177% gain, now suddenly why, how can I exit? That kind of things comes in, and it's hard to take decisions to exit and press that exit button. The moment you go over that, you will be a successful investor, because you need to know when to pull the trigger without being emotion bringing into play. That is important. And don't be emotional about it. And that's the difference between the normal retail investor and the pro investors, right? And that's a message I want to give you from this particular point, and I hope you got it. So go. Let's come to our first point. Why didn't it qualify for me for being a the best company or the great company? Why didn't I bought it? Okay, and sometimes there's a qualitative reason, there's a quantitative reasons, and there's a technical reason. So many reasons I bring together, but I'm just giving a gist of all that, and just something which I just build my own conviction about things. Look at that. Most popular OTT platform. Obviously, we know that Netflix was a leader in this space and is a leader and probably will stay as a leader. And there was a lot of margins being made, and obviously they were growing like rapidly because it was a new thing. And post COVID, everybody subscribed to it because sitting at home, they were just binge watching it. So they already had a tailwind. But then, hey, what happened to that? There was other players came in, tons of other players came in along the side because they saw there was space for this particular thing, and there was a margins to be there. So obviously there'll be competition. Now, what happens with that? You already have a set of subscriber base. You can only extract to a certain extent, and everybody started focusing on content. Hey, it's only specifically, or the particular content is only exclusive available in Amazon Prime or YouTube Premium, or it could be Twitch, or wherever it is, right? And all those different OTT platforms came in, Disney Plus, so, and Sling, HBO, and others, so many of them, right? And you yourself check how many of you have subscribed to and you're paying. Like, I am not big fan of all this, and I don't remember when I even watched Netflix, to be honest with you. And I always get confused when I go in and do have a subscription, but when I click on it, I don't know what to watch, and I just completely get out of that. But for me, the best, I'm a subscriber to YouTube Red, and I just love that because at least there's a lot of contents are there, and this what video you're watching on also on YouTube. So I love being on YouTube and watching some content, consuming some great content there. But you can see yourself what's going on here. So likewise, if you see here, and this is some screenshots I've taken from the web, and you see you have so many such subscription from India, and this is from the country where I come from, Australia. You have so many other, um, you know, different subscriptions available. At some point, this gets crowded, right? So you need to understand that there's a competition brewing up, and I thought even though they're early advantage, there'll be a lot of competition coming in, and there'll be a lot of investment has to be made on the content, and content has to be exclusive to Netflix, expensive content, and also obviously, they have to keep on investing and churning on it, and hence, I just decided that, and obviously, market was also pricing to the perfection, or it was a crowded trade from technical point of view also. And I will share with you some interesting fact after this also, so that you get it. Look at this. Now this is again very important. You have to look at it. I'm looking at per quarter. Each candle is 1 quarter. Okay, each candle is 1 quarter, and when you look at it, the chart this way, and I told you at the start of it, I'm giving you a template. You should also check that out yourself. Okay, when you look at 3 months or quarter setting, again, this I'm not sure whether it's available for free one, but I will leave the link below in of TradingView. If you don't have access to it, do get your free account set up, because that's the best tool you can get for investing. So, so every candle is a 3 month one. So obviously if you are looking at a business, every 3 months they're reporting, so you have to check on it what exactly the price action is happening at the same time, and then you get a clear picture of what exactly happened. Now look at this first. In the period of 2000, let me just once again, I just 1 minute, I'll move here so that you can see. I'll move myself. Yeah. So look at 2005, what happened. And by the way, this is a log chart. I don't know whether if you know log chart or this, if you, that's why you're seeing this like this. It is a log chart. When you're looking for over a period of 10 years or so, you always turn the log chart, and there is an button or there's setting there. I'll make a short video in future about that specifically, but that's important. You look at the log charts, and not the specific percentage. Once I go to trading view, I'll share with you also. But let's focus on what I'm trying to tell here. So look at this. Stock plummeted 77% in 2005, and then it had a great run. Then again, there was in the time of 2011 and 2013, within the matter of six quarters, stock went 82% down, right? Or not six, one, two, yeah, probably two, three, and six, 82% down. And then it had a huge rally, which is basically where they had a tailwind in the business and then start growing. And then now, stock has plummeted almost 70% from the peak. Okay, the stock has plummeted 70%, and 35% is or 40% what has come in last week is, but before that also it was plummeting, so somebody knew something about it, so that's why there was an exit. So it's important to understand this, and when I was looking at it, obviously there was a huge rally and price was in perfection, and then I knew that there was always a business hiccup. It could be a great investment. I'm not making a case here that it's not an investable company. Okay, I'm not making case here. I'm just trying to tell you that you have to invest in the right time and right price, and it has to be right investment. So when it was happening, I could see that there was the candles were also becoming smaller as a whole, and also you can see the volumes were also down, and plus that was giving not giving me a you know if you compare with this leg of growth versus this, right? um, you see this like big candles, you got volume going up, and it was the rally was happening and their volume was going down, obviously becoming expensive to hold. And then and you have you know that this was a topish form, and then there's a crash. So given that there was a history twice that it can plummet all the 82% or 77%, and plus being an OTT platform, the competition coming in, had I invested at this point, then that's a different story, which I didn't, right? Had I invested at this point, that's a different story. So these are decisions you have to make, and I don't want to be I don't want to be holding stock at the topish end, and when party is all about to over. Okay, so I don't want to make the video long, but I want to continue on to see tell you more about it. I want to share quite a few things. Now, Mr. You must be Bill Ackman is one of the biggest, one of the famous hedge fund, who is a hedge fund owner, and he owns this Square Management, Peshing Square Capital Management founder, who invested 1.1 billion in Netflix just 3 months ago, and he disclosed that. And Bill Ackman sells his stock now with 400 million loss. For him, 400 million, 400 million loss probably might be a certain percentage of his entire portfolio, and he can take that. It all depends on what is the risk manager is doing. My point is, uh, the point which I'm trying to say, that you always can't follow just because the Bill Ackman, a big investor, has invested in Netflix, so he knows more than you. You as a retail investor has more power than big hedge funds because you can move faster, and that is the power which I'm trying to relay through my a community here as a peaceful weekend investor is that, and I've been myself worked with a lot of fund managers for so many years building the solutions in that space. I'm because I'm originally from IT background, but I build a lot of solutions around investment management and worked with a lot of leading fund managers. So looking at it, I've been ex Nasdaq working and implementing stock market manipulation solutions, and I realized that hey, retail investors have more power than these big investors, and that is something which I am on a mission to explain that, and through my journey as investor, through my learning from various tools and companies I've worked with and fund managers, so that you can give this. And now coming to the point is that I also made a video. By the way, you can check this out. This was you can go to my YouTube video and you can see should you copy famous investor, and this was to do with Alibaba. Now we had a similar situation of Alibaba where um, one of my favorites, he also invested and exited. So I made this video. Please do check it out. I will leave the link on the card here, or you can leave the link on the YouTube description below. So do watch out. You'll get a lot of learning on that. I will leave that. So before I go into it, I want to actually share with you what the last point is, right? Just one minute. I'm just sharing my screen. Yeah. So let's look at it. So what would have with the, and now this is to do with, you know, I'm just sharing this. Let's go to Google Finance, and you see one day there was last one after this one 36% was for last 5 days, which was a big drop, and then come 1 month 42%, then it is 67%. So you see here, you can see the fall here. It is not happening for last specific what they're making out to be. It is happening for last 6 months also. It is 67% drop. So somebody was selling and knowing it. And year to date, we have lost all the capital of tune of 63%, almost 64%, and last 1 year it is 57, and you almost coming to the point where you are you almost like in last 5 years if you have invested, you would have been almost wiped out all your gains, and you would have been now sitting with, and still if you would have max, you still would have making 17,000%. That's a power of stock market. But at the same time, if you exit at the right time, you would enjoy that. And I want to share with you one thing which is specifically, so this is a micro trend.net a website, and you can see here, let me cross this, yeah. So one of the things which you can see is a cash flow statement, and I also want to give you one of the reason why I didn't invest it also. And let's look at it, some other company called, let's say, Google, which is there, right? So if you see this specifically, the net cash flow, okay, and this net cash flow is where it was. Let me click on it. Why it's not? Oops. Just 1 minute. It's a. Let me refresh it once again. I want to show the graph here so that yeah, it's coming. So you see the net cash flow for Google in millions, right? And it is an annual one, right? And let's take some other Apple. So you have a net cash flow, and certain times it is positive, and most of the time it is in positive territory. And obviously they have their own Cash flows are more to understand what they are investing specifically on, and you have to study that. But let's look at the specific one key financial ratios, and let's go to the Netflix. That will give you a very good picture. So free cash flow per share. This will give you a better picture in terms of it. You see here, what is the free cash flow? That's basically after all your spending, everything, after paying your the operating expense and any interest. That's the free cash flow which they will use to pay us as a dividend, and this is a free cash flow. Okay, as you can see, below this line is all negative, and only, and this is the yearly one. Only 1 year they had the positive one, right? And that's where the stock went big gungo. But then look at the Google. Let's look at the Google and see what is the free cash flow. Look at that. Now I'm just trying to give you a templatize it and see the Google today has $90 of free cash flow. Again, Google might have share purchase scheme and all that are happening, but you see this is it. You have to look at it saying that hey, the company should, after all, company is all about generating cash, and if you're not able to generate cash, then I don't want to pay for future growth, and that's one of the reasons. Okay, coming back to our presentation, which I'll cover a few things here and then wrap it up. I know it's getting bit video is getting a bit bigger, but again, this is important concept, so one has to understand. So this is a very good quote, and one I think again from a investing point of view, all these quotes are to be understood. Everyone gets their own view, understanding from this code, and try to have their own perspective to that. And I might have a different perspective, you might have a different perspective, but at the end of the day, you have to understand and decipher the message behind it. And when Mr. Warren Buffett says we don't have to be smarter than the rest, we have to be more disciplined than the rest. That is, but how do you action that in the real world? And taking this example of Netflix, I want to give you that what discipline means. There's no smartness of picking, hey, Netflix is a great company. It's all about discipline of getting in, getting out of the stock, and making sure that you ride the journey and be part of it. Let's now, I will show you in, so what we covered here, most part of it, right? We covered the why, and just to quickly recap that, right? So that you're getting it. So we covered the why, we covered the how we look at it. Now I'm going to share with you a simple method which will you can implement this after knowing from that code. Okay, and the end I will be having my surprise element. I have not forgotten that. Okay, so let's get cracking and wrap it up quickly. So let's look at this. This is a monthly chart, okay? And again, there are many ways to look at it and many various indicators. So if you are not using TradingView, I'll leave the link below. Sign up. It's a free. You don't have to really pay for it, unless otherwise you want to use some advanced features. But again, it's up to you. But this is a monthly chart. Now this is a moving average. I put 21, 50, and 100, and moving average, I will cover that later, but probably it's out of. I don't want to cover that and make this video long. But moving averages basically tracks the averages of the price over certain periods. So if you see the red one is 21-month moving average, and green one is 50, and then you have 100-month moving average. Now, very simply, okay, and this is again I've taken the log chart, okay, because it makes much clearer and visible to see what is happening, because this fall doesn't look as big as this, because this is almost, we also had the similar fall earlier, and it's almost similar pattern, right? So we have to see how it will form in future. Is it going to form the same form and start moving up? That's time will tell. But if we look at the left side of the chart, we can predict something in future, right? So there was a big fall here, and again it's a log chart, so keep that in mind. So let's say if you have invested at this breakout, right, and you see here the stock 21-month, how, so first time it took support, second time support, third time, fourth time it went below, and then now it's the fifth time. But in previous instances, never came close to 50-month average, right? As you can see, it's the first time it broke below 50-month average from 2000. If I have to take from here, it is almost 2014 to 22. It's the first time. So again, there are multiple exit strategies I teach as part of it, but I'm just giving you a very simple templatized version of it, which you can implement in many stocks. You could change the moving average criteria. You could have 11 months. I generally prefer Fibonacci numbers. That's why it's 21, 13, 10 or 5, whatever you feel like based on your risk appetite. But I'm just trying to give you a gist of it, what I would have looked at it. I said, hey, all I have to do is just look every month and say, hey, has it closed below 50? If I am the investor here, I've already invested in the $35 and I'm happy to let it run. And I know that many occasions it's touched 21 weeks and bounced back. But this is the first time it never bounced back. So something fishy happening, one has to understand. So one has to understand that you have to exit first and then do your analysis, and don't be greedy. And that is what I message I want to give you. Don't be greedy and exit and think. People don't think that they should exit because they had made such a big run, and they think, oh, I lost from 600, I've lost $200, why should I exit? Well, first of all, you need to have a right entry. If you're entering here, obviously most of them are trapped, right? Most of, because you see a news will come in, big investor come in, and all that will be here, because that's a trap being laid out. Okay, so if you are part of the trap, obviously God will save you on that one. But thing is, if you've invested right on this breakout, you would have, simple, use this simple moving average on a monthly chart, can do the trick. Okay, so that's simple rule. You try out with different stocks you hold and do this in log chart, and again, and tell me what exactly your takeaways were. Okay, you might say it's very simple, but it is really powerful, by the way. So that's what it covers. Okay, and you can try again different moving averages and try that out. I will leave that to you. And that's, so now coming to the part of surprise thing. Hope you're enjoying this video, and if you're enjoying it and you're getting the value out of this, I would say do give a subscribe button to my channel, and also hit a notification bell, and give a thumbs up, or so that I know that you're liking our content. It also helps the YouTube algorithm and let your channel grow as well. Thank you so much. So coming to the surprise element of part, okay, everybody loves gifts, right? Everybody loves gifts, and I love gifts too, right? If you love gift, type yes on the comment box. I have a trading view blueprint course, okay, and that's particular tool, that's the power of that trading view, and I want to give away that trading view blueprint. And that, what does it cover in that trading view blueprint is it covers basic all you need to know about TradingView and work like a pro. Okay, I teach both free version as well as a paid version, and you can work free. It's a tool which going to be completely, you'll have a complete control on it. It's going to make a huge time saving by implementing certain techniques I'm going to teach, and how you can filter stocks. It's a recorded lifetime access I'm going to give you, and all future updates I'm including with you also going forward, because the tool keeps improving and keep adding, so I keep adding onto it. So if you want to win this, or you want to have this, all you have to take some action. Are you ready? And action is very simple. You please leave a comment below, what were your key takeaways from this video, right? What were the key takeaways? I want to see the comment below, and I personally want to respond that, hey, because that way it only helps you, and I want to thank you for being here till the end of this video and learning with me and being, in this journey. So I want to, thank you from this bottom of my heart, and I want to make sure that you also get this special offer from my side. I'm going to choose a random winner through a tool with the comments in next 1 week or 2 weeks. I will let you know. Probably it will be next week, and then I will be giving access to that particular course, which will be with you for lifetime. And by the way, this course itself will be worth over $147, right? So I'm looking forward for your comments. Thank you so much. Namaste, as we say in India. See you next time in next video. Before you sign off and I sign off as well, I give a thumbs up, share, like, comments, and also connect with me on other social media channels by going to this link sbhatia.co/bio. And this is sbhatia.co/bio, and you'll get all my social media links, which you can be part of it. And this is Shivendra Bhatia from Peaceful Weekend Investing signing off. Enjoy your weekend and happy investing, and wish you a great, profitable investment journey. Thank you. Bye bye.